Morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Tuesday morning pre-market webcast. Well, I had a lot to talk about today. We were going to talk about resistance up at 1204 to 1208. We were going to talk about the 20-day pivot at 1206 and that gap looming up at 1213 to 1214. That's all off the table now. We've got this coordinated central bank effort. I think it's 6 central banks have gotten together and decided to intervene. So we are currently trading 1231.5. We've hopped over all of that resistance. Okay. So I've been getting emails this morning and tweets on the side about what this coordinated action means. I don't know. I really don't know. I've got a lot of reading to do. I think we all do, to figure out exactly what this means. But as a trader, here's what I know. We've hopped up another 3%. These gap ups are fadeable, but you have got to respect the dynamic that's working against you if you want to continually want to be short this kind of a market, okay, over the intermediate and long term. I'm not talking about day trades. I'm talking about putting on longer term positions. You are fighting every central bank on the planet Earth right now if you're going to try to put on longer term shorts. The other thing to do that's helpful in these situations is to look at a daily chart and zoom out. And if you look on the daily chart, you see we made the low at 1068, rallied up to 1289.5, pulled back to make a higher low at 1147.5, and we're now back up in the 1230s. So the ball is squarely in the Bulls' court. The Bulls have got to make a run now at 1290. There's really not much more that everybody can do to get them set up to make this run. They've got to make a higher high above 1290. And you look at that daily chart and things are stair-stepping higher. So you have to ask yourself, with all this money being thrown at the markets in Europe, the money is getting thrown at Europe whether they want it or not. The powers that be have decided that we are just going to print our way out of this, kind of like we tried to do here. How that turns out in the end, from a trader's perspective, it doesn't matter. We trade what we see, we use stops, and we're hedged. But at the same time, you have to respect the overall dynamic. And the overall dynamic on the daily chart is that we're making higher lows over a period of time. And now the issue becomes, can they take out 1290, or do we go up to 1290 and fail, or do we make a lower high and then we get back into a bearish wedge situation? But we are a long way away from that. So just understand that this morning there's been some action and a dynamic has started. Okay, don't forget Friday non-farm payrolls. That's going to be big here. You can't get away from the fact that the job market is doing what it's doing. I know ADP was good this morning. It's ADP. Let's do support and resistance. Current trade is 1233.25. So you've got the overnight high, 34.5, and then you've got a bunch of double fib levels, okay? 1240, 1241, 1247, 1248, 1253, 1259.75, then I've got 1266, 1273, 1276, and 1289 to 1290. On the downside, 1223, actually 1230, then 1223, 1218, and now you've got, support-wise, you've got 2 big levels. That old gap at 1314 that just got filled with authority, okay? And below that, then you've got that multiple fib level area from 1204 to 1208 that had acted as resistance, and now you have to say to yourself, at least on the first time down, it's going to act as support. So resistance becoming support, first at 1213, then at 1204 to 1208 on any severe pullback. And I would fully expect those levels to be retested, probably not today, but over the next week or two. We've got to go down and test and see where support is. We're not just going to keep going up from here. So trade what you see, and I will see everybody tomorrow. Mike Vacchi, Princetontrader for Mr. Topstep. Trade them well, and have a good day.